Hello traders and Market Club members everywhere. Adam Hewison here, coming to you from the digital studios of Market Club. I want to share with you something about Netflix. Netflix reported yesterday after the close, huge gain in subscribers, over 2 million new subscribers. They're going all over the world now. It seems like they're on a roll, and the stock looks like it can go significantly higher. But I want to show you something we did in the first quarter, which did not prove to be a successful trade. It was a surprise to us, but it shows you by sticking to the trade triangles of trusting the force, you're going to make money. So let's start with that right now. First of all, I'm going to go back to the first quarter. Here we are. We were basically short. The market jumped up dramatically. We lost $100 on that trade. Very, very unusual. Okay. However, we're long now, and you can see we're long from right here, 441. The market's currently trading at 543. So we picked up the loss here, and that makes us probably a little bit profitable for the year so far, and the year has still a lot to go. We're looking for Netflix to hit $700. That's our upside target for this stock. So it still has a long way to go. It's not going to get there next week, next month, maybe not even next year, but that's the upside target we have for Netflix. Let's go back to our portfolio that we're going to share with you today, and you can just go through this. All trade triangles, green, Netflix. Dow, intermediate trend down, trading range. We've talked about this before. Same with the NASDAQ and the S&P 500. Gold, little yellow box around a green triangle indicating that was the buy today, $1,207.59. If you look at the dollar, continues to be mixed. You can see we've got a daily arrow up, but the weekly and the monthly are down, so you want to be out of this market at the moment. And the crude oil is all positive. There's a big move in crude oil yesterday. We'll cover that in a little bit later today. Let's go to the Dow. As you can see, I would not be surprised to see the Dow take out these highs at 18,200 today or tomorrow. And if that happens, you're going to see this market really jump up, probably, I would say, to the 18,800 number, somewhere along those lines. But it looks as though it's beginning to form a base, but we need confirmation that that's going to happen. You can see this sort of action here. That's kind of like a pivot point. If we go over that level, we can generate a target zone of 18,800 for the Dow. Let's see if that happens. But right now, it needs to close over 18.2. NASDAQ, pretty much the same picture. We're sort of building that base. We need to close new high ground very soon. It's a little bit more positive, I would say, than the Dow, but you can see that's the base. If we can get this sort of double bottom pivot point type action, if we get over there, we're going to see this market go higher. I would say tomorrow is a good day to watch this very, very carefully. On the S&P 500, same pattern. They're all in a trading range. You notice the monthly, the longer term trend still positive. The intermediate term trend is negative, and the daily, which we don't pay a lot of attention to, is up, but basically it's 65, indicating a trading range. And that's very simple. If you look at this market, you can just see kind of like where we've been in this trading range, and that's where we're stuck right now. We need to break out of this trading range on the upside or the downside. We'll have to just be patient to see when that's going to happen. Now, gold gave a buy signal today. Now it's come down from the best levels. It's currently trading at 1,200, so it's down about $7 from where we get the signal. It's in a trading range, but the daily and the weekly are still positive. So that's the key thing. Your risk would be if the market were to move under the 1183 area. That's the key for this market reversing back down. I don't think that's going to happen. I would not be surprised to see this market rally a little later on in the day, or certainly maybe next week. So let's see how that plays out. On the euro dollar, we have a mixed picture. We have the daily and the weekly in conflict. We have a 85 indicating the major trend continues to be down, but what we're seeing now is some sort of hesitation. Maybe this is as far as we're going to see the euro dollar go on the downside. Maybe not, but the reality is we sort of hit the target zone. If you look at this little pivot point here, we sort of got down there. Now we're sort of trading around in what I consider to be just a really kind of a trading range. Look at this. It's perfect. So down here looks a buy, up here it looks like a sell. Let's see how this plays out next week. But again, we're higher for the week, and that's the important thing to remember. The euro dollar is higher for the week, not the US dollar, but the euro dollar. Crude oil clearly broke over the resistance level here. And remember, we talked about trading range. This is a trading range. This market is clearly broken out of the trading range just there. You can see it closed very well. And I think we'll see this market actually move higher. For what reason, I don't know. It doesn't matter. They don't pay you anymore for knowing the reason. But the important thing is to get the direction right and trust the triangles, because they really do work. So if you look at this and then you see a sort of potential for this level here up to here, back down to here, so 45, let's say to 55, 10 points. We flip this over, takes us to 65. So I would say the target zone for crude oil in the future is going to be around $65 a barrel. Let's see how that plays out. I'm Adam Hewison from Market Club. Have a great day trading. Remember, we had a gold buy signal, and Netflix is set to go to $700, plus crude oil has made a turn in our opinion. I'll see you all tomorrow. Ask about any market and get an answer. Only for members and only from MarketClub.com.